training, Neer has also spent 6 years in the Israeli Air Force developing software for combat aircrafts. And by education MBA, Neer has a MBA from Kellogg's School of Management. For Onmobile, he's a great addition to the team, and we expect that he will really make a huge difference to our gaming foray. Neer, of course, will be an integral part of these calls going forward. Welcome, Neer. Thank you. Now, I will give a brief update on our products and business, and then Ashish will talk you through the highlights of our financial performance. Let me begin with updates on Challenge Arena. Q1FY23 was, in fact, our most successful quarter for Challenge Arena in terms of sales. 12 new customers agreed to our terms for Challenge Arena, taking our cumulative agreements to 38. Out of these, 20 are already live as on end of Q1FY23. We expect the momentum to continue and these cumulative agreements to reach around 46 by the end of quarter 2, driven by successful outbound sales effort, which will result in higher sales in FY23. In fact, as of end of July 22, we already have 42 customer confirmations. And if we split it geography-wise, Middle East and Africa leads the geographies with 20 customer confirmations, followed by 14 in Asia, 6 in Europe, and 2 in Latin America. Further, out of this 42 customers, let me say that 28 are actually new logos, which is almost 67% out of that. And that in itself is a very significant achievement from a sales perspective and for our future opportunities perspective in terms of cross-selling other products also to them. Challenge Arena's contribution to the total revenue continues to go up. It has increased to 7% in Q1 as of now, as against 5% last quarter. The revenue, if you were to look at Q1 last year versus now, has increased by 11 times from a year-on-year perspective, which evidences strong traction for the product. Robust revenue growth is expected to continue in the future quarters as more and more new clients go live. We aspire the momentum in the coming quarters. But I will at this stage like to reiterate the guidance shared last quarter that we are aiming for a decent double-digit growth for overall Onmobile revenue in FY2023, which obviously we've not seen in the past few years, to say the least. In terms of usage and actual consumers, the cumulative gross paying subscribers at the end of the quarter stood at 6.7 million as compared to 4.4 million last quarter, a growth of almost 52% quarter-on-quarter. We are targeting to touch almost 10 million, about 9.8 million customers in Q2 FY23, which will be our highest gross addition in a single quarter till date. We are continuing to see healthy pipeline and expect to be live and sign many more clients in the coming quarters. Challenge Arena's net active base also doubled every quarter in FY22, and in FY23 the net active base increased to 1.66 million from 1.33 million in Q4 FY22. We are targeting to touch 2.57 million customers in Q2 FY23, which is an addition of over 1 million active subscribers from the current quarter's numbers. Also, to achieve the base of 1 million active subscribers, we took almost 4 quarters, 1.33 million in Q4 FY22, like we earlier said, and now we will be increasing the next 1 million in only 2 quarters. So that really shows our strength and success in Challenge Arena. Let me add that this is also clearly a lead indicator for the revenue generation that we are likely to see. Not to mention something that you already know, that this is a subscription business, and as we continue to add subscribers, revenue will have a multiplier effect. We are confident, actually, that going forward, we will see significant revenue growth coming from Challenge Arena. I would like to reiterate that we continue to see good traction here. We are noticing exponential increase in multi-active users for this segment. Now let me also talk about profitability of Challenge Arena. As mentioned during our conversation in the last quarter, we are initially investing in growth through a disproportionately high marketing spend. especially the new geographies or operators that we are continually going live with. We expect this to settle down by the next quarter, leading to a much better profitability from Q3 onwards. CA is a product which intrinsically has a significantly higher EBITDA as compared to our existing products. At a steady state, we expect the product to generate an EBITDA of more than 30%. Also, this will reflect well on our overall profitability of the B2B business. As you all must have noticed, our gross margin has already started to improve on a quarter-on-quarter basis, and we expect this trend to accelerate in the coming quarters. Coming now to Onmo, I'm happy to inform you that Onmo B2B business has started generating revenue from this quarter. The amount as of now is very small, but has given us tremendous confidence in the power of the product. We are already looking at growing this B2B revenue by more than 4 times in Q2 itself. Our confidence comes from the fact that at the end of Q1FY23, we had 12 customer confirmations. 3 of them are live, and 2 of them actually just went live in May, June. So the impact of that revenue will start showing in Q2 itself. And then we are again going to see seeing a lot of traction among prospective customers. I would like to reiterate that we expect Onmo B2B to follow the revenue trends of Challenge Arena with probably a steeper growth trajectory. During Q1FY23, to start awareness about our D2C product, we launched our marketing campaign in India, which got a very positive response from everyone in terms of numbers. We reached 3.5 million people on our key social platform, total 8.8 million plus impressions, and the campaign had total 6 million plus views. We are also seeing good early traction on the product, with our campaign bringing in 2.1 million new users on Onmo. Importantly, we also saw 22% registrations coming from Chingari in the month of June, although we expect this to be much bigger in terms of numbers going forward. We would continue to see growth in the coming quarters and increase all critical KPIs quarter on quarter. Going ahead, we will be doing more campaigns to create product and brand awareness. We are continually tracking performance of our campaigns to optimize them over time, and we'll shift focus towards getting engaged users on Onmo. These optimizations are also focused on bringing down the cost of acquisition for us. Another important area of focus for us is to improve the product and platform performance. On the product front, we are focusing on delivering great onboarding experience for users, which ties with our goals of increasing player engagement. Simple features like Just Beat It help a lot in this direction. We will soon be delivering our social suite of features, which are a core part of our proposition and loved by our telco partners as well, which will add to our overall B2B adoption. On the platform front, we have made great progress by optimizing our solution to handle more users per server. This will bring down our cost of hosting the service considerably. We are also upgrading our streaming platform to be compatible with a wider game library, which will help us quickly onboard a vast set of games targeting consumers across different age groups. So the next quarter is actually going to be really exciting for both Onmo on the D2C front and the B2B front. Let me also say at this stage that all our other products, the legacy ones, except videos, which is slightly down primarily due to Euro impact, have showing growth and are stable and showing growth. So clearly, the legacy products are showing stability and maybe little growth, whereas Challenge Arena and Onmo will get a more and more growth. I would like to mention something on the cash on the balance sheet and fundraising. While we have invested on product development, our intent is to ensure that the big spending on the D2C marketing will happen post our fundraising at an appropriate time. Till that time, it is our endeavor to keep enough cash which will get augmented through our profitability, which is likely to get better in the coming quarters. With this, I'd like to hand over the call to Ashish to talk more about the financial performance. Thank you.
Thank you, Sanjay. A warm welcome to everyone on this call. I'll share the key highlights of our financial performance for this quarter ended June 30th, 2022. We reported revenues at rupees 141 crores, a growth of 5.9% on a sequential basis and 4.4% on a YOY basis. The growth was primarily driven by Challengers Arena, Tones, Games and Infotainment. The traditional business, as Sanjay mentioned, continues to be stable and growing. We today have approximately 100 active operator relationships globally, which will form the base on which new businesses like Challengers Arena and Onmo will be scaled up in the coming quarters. On the cost front, in Q1FY23, there was an increase of 15.3% in manpower costs. Sequentially, this increase was primarily due to investments on upskilling. Our marketing costs grew by 15.7% quarter-on-quarter, primarily due to increased investments in new products and other digital products. EBITDA stood at rupees 7.8 crores with a margin of 5.8% for the quarter. The drop in EBITDA was majorly due to an increase in marketing investments. We should see improvements in margins as revenues from Challengers Arena scale up and marketing costs normalize. Our profit after tax was rupees 4.1 crores with a margin of 3%. From a product perspective for Q1FY23, Challengers Arena, Tones, Games saw good uptake in segmental revenues as well as contribution to the total revenue on a sequential basis. While videos was stable, the small decline is only on account of FX conversions. In terms of geography, India registered the highest growth of 23.6% on quarter-on-quarter basis during the quarter. As Sanjay mentioned, I would echo the same that going forward, we would expect to see a decent growth in revenues led by both new products, Challengers Arena and Onmo. We expect to have agreements with 46 customers by Q2 FY23 for Challengers Arena. In terms of our balance sheet, our DSO was at 134 days. We have a strong cash balance on our book at rupees 120 crores. During the quarter, we have incurred R&D on expenditure on product development to the tune of 15 crores. We will continue to invest behind our gaming business, strengthen our position on the B2C gaming market, as well as continue our foray into the B2B space. A lot of operating metrics and data have already been shared in the presentation deck. I'm sure all of you have access to the same. Some of the metrics are being shared for the first time to give more visibility for the scale-up of Challengers Arena and Onmo. This may not be given in each quarter. With this, I'll now hand over the call to MC. Thank you.
Thank you, Ashish. Thank you, everybody, for joining this call. You know what? We shared with you last quarter the vision that we have, which is very important, right, is to grow to 200 operators with our gaming platforms. And we've geared up the whole company to get to 200 operators. Just for you to realize, 200 operators, one of our board members, that famous board member, Sanjay Kapoor, right, you said that he's never seen a product in the telecom industry get 25% penetration, right? There's about 800 operators in the world. But he really believes we're going to do it. And I believe we're going to do it. If you look at our numbers today, just on Challenge Arena, we don't give out normally the Q2 projections when we're in Q1, right? In this case, we've done it once just for you to understand the numbers and where we're going. But we project to have 46 signed contracts, going in Q2, and we're only in Q2, Q3 and Q4 are coming up. And really just to be live with 12 customers in one quarter, right? That's what we aim to have in Q2. It's very big, and obviously the key is to continue that that setup that we have today. We're all set up operationally to be able to deliver 12 operators a quarter, and this one. And this is just for Challenge Arena because we're doing the same with Onmo, right? Onmo now has 12 signed deals, 3 live, but signing a contract is one thing. Getting set up and launching an operator is a lot of effort, a lot of costs, and a lot of marketing launch. So when you look at our results today and you see the revenue growing, but you see the expenses growing, and you look at it and profitability goes down, well, it's normal, guys. I just want you to understand, the more we're going to sign and the more we go live, the more effort it is. It takes us 2 quarters to get back the investment on a launch with Challenge Arena. But after that, you get the profitability. So we're all geared up to go to 200 operators. So that's not going to stop. That's exactly what you see. Q1, Q2, it's coming in all the next quarters. And to get to 200 by 2025, that's the next 12 quarters. Now, the beauty in this model is that you will see profitability coming up pretty fast. So that's, we're really excited about this. We have a double gaming product strategy towards the operator. It's a great strategy for us also to get, with our own servers. The fact that we have a Tone business that's been there for 20 years, having 3,000 servers installed on Tone into operator, we have an awesome footprint and hyper-specialized team to deal with operator and maintain server, which makes sense for edge computing, as I mentioned last time. There's no shortcut in the woods to do edge computing, which we need for low latency, especially for gaming. You need to install your servers into an operator. Even Amazon can't just take the shortcut and say, I'm Amazon. You have to go operator 1, 2, 3, 4, 5 and deploy their own servers in operator's network. That's exactly what we have as a competency, and that's what we plan to 100% leverage. The whole Tone's department leverage on installing gaming servers for Onmobile. So, the Challenge Arena service is way easier to install than the Onmobile service. That's why it's in front. But you see what we sign, most operator that we sign, when you look 38 today, 46 projected by end of Q2, most of them want to sign Onmobile also. It's a double product strategy. And they want to install servers in their network also. So it's really, honestly, an awesome strategy that we have. Really lucrative also all the way, and that's why we focus. As I promised you, also we'll have the best mobile gaming service. I want to come back to Nir. To have the best gaming service, you need to have the best team in the world. I'm really thankful that Nir has accepted to join us here in my office with me. Just for you to understand, Nir was head of mobile gaming at Take-Two. Take-Two just did the $12 billion acquisition of Zynga. Nir was involved. Nir's been involved in gaming the last 12 years at all the big companies, at King, King Activision got sold to Microsoft. He was involved in all the mobile gaming back then. He's done smaller companies like Dots, which he sold to Take-Two. So he's done small, going big. He's done very big, going even bigger. So if you want to, if you want to have the best gaming service, you need the best team. And I thank Nir for joining. Out of New York, he knows all the best guys in the mobile gaming industry that can join us also. So we'll have a very good Onmobile office in New York. And I can tell you, we're shooting very high. So I'm quite excited. So to this, I'm going to open the floor for questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Neeraj Mendirata from Alpha Family Office. Please go ahead.
Yeah. Hi. Good evening to all of you. I have actually a few questions specific about the margins. So we have seen the EBITDA margins actually have been falling over the last few quarters, primarily because of the increase in marketing spend as well as the employee costs actually. So we have seen the EBITDA margins actually coming down to around 5 to 6%. Historically, it was in the range of around 12 to 15%. So what do you think would be the sustainable EBITDA margin going forward? That is one question. Second is, in the challenging arena, you have guided for EBITDA guidance of 30%. Can you provide some guidance, EBITDA guidance for the Onmobile business also? That's the second question. Third is actually about what is the cost of acquisition for each gamer and the repeat rate for the gamer. Thank you.
Okay. Yeah. Okay. Thank you, Neeraj. Clearly, like I said, there is this investment that we are making in marketing expenses, especially together with the launch of the operators all across the globe. So you're right. We've had, for example, we had 100% expense growth as far as marketing is concerned if you were to compare it with last year on year, and about 15% quarter on quarter. While this will stabilize going forward, the revenue growth will continue. So our aim is that you will very quickly start seeing the numbers that you quoted in terms of the EBITDA percentages. The challenges arena, like we said, is at a mature state, give 20%. Similar will be the case on a mature state for the B2B side of Onmobile. Clearly, that's what our focus is, to get to that level. So we will see sustained new revenue getting added, which is much more profitable than our existing products. The change in the gross margin you must be seeing already. We believe that will get further accelerated over the next 3 quarters, let's say. So come our exit for Q4, you will have a very different set of financials to look at in terms of profitability. Does that answer your question?
Yes, it does help actually. And any update about the cost of acquisition for each gamer and the repeat rate for the gamer?
Yeah, go ahead.
Hi. So basically, as we kind of made everyone aware, we've started with awareness campaigns at this stage. Right, the last complete quarter was dedicated to create awareness among users, bring in a lot of visitors to the product. So we've been tracking cost of acquisition, but it's initially been tracked at the registration level. So initially we were at close to $1.3 plus range per registration, and we've steadily been able to bring it down to of that, and we are continuously focusing on to bring it further down.
And that's the B2C side.
Yeah, that's the B2C side of it.
Yeah. As far as the B2B is concerned, it's a very different metric altogether.
Okay. What is...
Yeah, just hold on.
Yeah, so on the B2B side, we are kind of global company. We're present with this product, with Challenges Arena, in roughly about 17 to 18 countries. So it varies from country to country, the acquisition rate for a player. So it would vary from, let's say, average if we take across Asia, Middle East and Africa, it would be close to $1. Whereas in Europe, it would be in the range of 12 to 15 euro. That would be the range. And especially in India, it will be about 50 rupees.
Okay. Thank you. That really helped. And any guidance on revenue contribution from India, maybe in the next few years, since now you are actually focusing on the India business primarily?
So, no, our focus is global. India is actually now a smaller part. It's about 15 to 17% of our revenue overall. And like we mentioned, and we gave you the geographical breakage, it is primarily we are global. So India will remain a small part. It is doing well. India is doing well. We must add. The Indian customers are doing well, and we are therefore experiencing good growth in India also. But from an overall perspective, it will remain in the same ballpark. We don't see any significant change happening because we believe that the global customers will continue to contribute in very large number as far as our revenue is concerned.
Okay, that's helpful. Just a couple of questions. For the Onmobile B2C business, what is the kind of money actually which you plan to raise, and would it be through debt, the equity issuance? Any guidance on that?
So we are flexible in our approach, and at an appropriate time we'll let you know. But the overall thought process or strategy in this is that we will expend a significant portion of money only once we raise the dollars for the D2C business. As of now, the focus is B2B, where we don't need funding to grow or from an investment perspective. So, and as far as our product development is concerned, that will continue with our own funding. So to that, we don't need any funding. We will continue to fine-tune the product. We will continue to do growth business as far as B2B part of the Onmo business is concerned, and which, like we said, is scaling up very, very well. But whenever we do this, we will come back to you guys at an appropriate time in terms of quantum and the timing of it. We are talking to various stakeholders, but we'll come back with the quantum when it is appropriate. Thank you.
All right. Thank you. Just one last question. Is there any impact of the negative news on the Gari token collapse on the investment in Chingari? Plus, do you think this has caused any kind of, could be any kind of provisions in the diminution of the investment in the coming quarters?
Oh, no, on the contrary. While we cannot divulge the numbers that they are looking at. But they are looking at the next round of funding going forward, and it will be at a substantially higher multiple of number at which we've invested. So let me not say beyond that, but we will not have any hit. There's no question of hit. It is a question of how many times the value will increase.
Okay, so the Gari token collapse will not have any impact.
It is not that we are aware of as of now.
All right. Thanks a lot, sir. Thank you very much.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Kamal Sodhi, an investor. Please go ahead.
Yeah, hi. Good evening, gentlemen and ladies. One of the things that strikes me most times is that companies with great transparency and outlook towards integrity, etc., do declare some numbers of acquisitions, sales, etc., on a monthly basis. For example, the automobile industry, the telecom industry. Since you're getting into this business where you've kept an ambitious target of targeting 25% of the global telecom operators, and you now have some, I would say, reasonable success within a short span of time, don't you think it's time that you start issuing a monthly, how should I put it, input to the universe out here, which says that these are the numbers of contracts signed, etc., or active users or paid users or subscriptions received, etc. That's number one. Number two, we've noticed that the past year or so, there have been a great amount of traction as far as investor meets are concerned. Now, I would ideally like to believe that the information that you give them is already existing in the public domain through your quarterly investor calls. However, it would be nice to see you also publish the presentation to the exchanges that is made to these investor analyst meets. I don't think this is difficult for an organization that transpires to be a global company with reasonable success coming to Onmobile Global in the future on the platform side. And my own experience of the past 10 plus years as a shareholder is that you've always been evasive and shy in terms of giving guidance. And even when Rajiv Pancholi was around and the gentleman before him, I don't forget his name, I don't recollect his name rather, used to talk about giving a bit of guidance for the next quarter. And that happened for a quarter and then it fizzled out. And so you've never really upped the game as far as your ability to give guidance is concerned. So if you're not able to give guidance, at least can you publish a monthly report as I requested under my point 1? Your comments, please.
Yeah.
Sanjay, 2 seconds. Sorry, Sanjay.
Go ahead.
I just want to be clear on this one, and I don't know if you're reading the same presentation that we give out to the market, but it's very clear on slide 7 of the presentation now on Challenge Arena. We have actually given projections for next quarter on how many net active subscribers that we're going to get. 2.57 million projected. So, I don't know.
No, so let me interrupt you here. I have gone through the presentation and you're right, it's available on a quarterly basis. I am asking for a monthly, report after the month is over, like the automobile industry or the telecom industry issues to their shareholders and the exchanges, etc. So this way that, the company is doing something in that direction.
With you, I have many public companies and, here in America, like Stingray, for example, a music business, and we have subscription, and we never give out monthly. Quarterly, I mean, I want to be very transparent on a quarterly basis, but...
Well, let's not get into that kind of a subjective argument, who does it, who does not. I think organizations that want to really stand out and really want to show the universe what they are made up of in terms of metal, they would consider it. So I think I would not like to get into a subjective conversation as to X number of people do it and Y number of people don't do it. It's a requirement. If you think that your company is geared to meet and your company wants to, move to the next level of transparency, it's up to you.
Okay. But I just want to come back on the information. We're going to give out the same information for Challenge Arena and Onmobile when we sign up operators, and we're giving out the number of contracts signed, the live customer, and then the number of subscriber as a basis, quarterly or monthly. But is that okay with you? You're missing something?
No, it's
else?
not my requirement.
Yes.
See, the reason FC I made this request is because two reasons primarily. I'm happy to see a lot of investor companies coming and meeting you, and you going out and reaching out to them, and you have a certain target in mind for a marketing expense of $100 million over the next few years, for which you're raising. Hopefully, you would raise private equity for your subsidiary very soon. And I wish you all the best as a shareholder for more than a decade now. It just gives a lot of your investors, the stakeholders, a lot of confidence. And the month has passed, and on the 1st or the 2nd of every month, you come out with a number saying, Onmo, so many acquisitions agreements signed. Challenges Arena, so many acquisition customers bought on. So many made live. This is just like a monthly update. And we are not asking you for something you haven't done. This is something that you have done, delivered, banked, and are just informing us on a monthly basis, not on a quarterly basis. It just raises your levels of, transparency out there. I mean, look, frankly, I don't want to say this because this is something way back from the past, but, the past hasn't been very, full of integrity. And I'm talking about Arvind Rao and the period thereafter. And this is not a pointer to you. So I think it's time, you reverse the cycle a bit.
So, okay, we will think through this, but as we stand today, frankly, we very clearly we will like to give quarterly data. But yeah, it's a good suggestion. We'll think about it. And as far as the presentations, etc., to the investors is concerned, when we meet them, we actually take them through some of the things that we've uploaded on our site. So we don't necessarily go any further than that. We generally talk to them about our vision, which we've very categorically, in fact, last time put on our website clearly. And in fact, FC talked about it in terms of 200 customers and all that. So I think very clearly when we talk to the people, we tell them what is our game plan and where are we aspiring to reach, which we, in fact, FC put it out in this call also. So the intention is to give everybody similar data. We don't intend to, camouflage anything or give anything differently. We openly talked about the mature state profitability of the new products. We've said it here. We will say it to the investors that we meet. They do their own mathematics like you are wanting to do based on the monthly numbers. They also, everybody does their extrapolation in that sense and does take their calls on the investment criteria, etc. So clearly, we take your point. We will just think about it. But like I said, quarterly we will definitely give. Monthly we will. See, we are. I don't know whether you've been attending our calls regularly, but over the past at least 8-9 quarters, we've tried to increase the transparency level, and we will continue to do that. Having said that, there is some because there are very less competition involved in this. We don't necessarily want to immediately divulge some of the numbers. I'll be honest with you.
So I have been attending the calls for around a decade now.
Lovely. So good.
So the point here is, I believe that you're not very confident as an organization in giving guidance. So a monthly report card is not exactly a bad idea to reach out as a communication, right? And it's not about whether you've divulged anything concrete or specific to only a handful of investor analyst meets. It's about your intent backed by demonstrated behavior and bringing everybody on the same page. Like the fact that you talked about targeting 25 telecom operators globally is a wonderful news. And this is the first time I'm hearing something like that that makes me want to, engage with you, because I've been a very quiet listener, I would say, for at least 4 out of the 5 calls that I attend. I just come, attend, and walk away. So it's about you. I mean, are you giving us the confidence is the question. I mean, yeah, I'm sitting on it for 10 years. I'm in the money, there's no doubt. But I might want to buy more in the company, say, versus some other investments that I'm considering.
Sure.
When a Maruti, a Tata Motors, or Mahindra and Mahindra, or Airtel, or Vodafone, or Jio, even retailers nowadays give their monthly sales numbers. Mm-hmm. We're not asking you for sales numbers. We are asking you just consider putting out a dashboard out here on a monthly basis of what you've achieved. Onmo signed on, Onmo went live, Challengers Arena signed on, went live, new strategic alliances, whatever you think you want to do. But at least that's a form of an engagement, and that's like the lowest hanging fruit you have, right?
Yep. No, take it.
If I have to really get into a subjective argument and sell you the idea of how to engage with somebody who's out there looking at upping their investment or coming in, I think this is a great way to build some credibility. At least it shows movement, it shows progress, and you've got some good things going. Why wait for a 90-day cycle to come on a call and then share a PPT and then reiterate that on a call?
Mr. Sodhi?
Point taken, Kamal. We'll consider that. Thank you. Yeah.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Hi, congratulations for a good set of numbers on Challengers Arena. The trajectory looks extremely promising. Just a question on the Onmo B2C side. I think you had mentioned that you will start giving us a separate P&L for that. So if you can just share some numbers as to what was the marketing cost which is embedded in this for just Onmo B2C?
So actually, as of now, we are still at the beta stage, and therefore the separate P&L is not happening as of now. The moment the D2C revenue starts to happen, we will, start giving that data separately, like you said. As far as marketing is concerned, there is not much. Like you said, we've kind of done an awareness campaign, but that's not something we'd like to talk. But overall numbers you've seen, these are small numbers, maybe between 1 and 2 CR somewhere.
Okay, so majority of this is focused on Challengers Arena and Onmo B2B.
Yeah. But mainly Challengers Arena is the biggest number, so to say.
Right. And Sanjay, if I heard you right, you're saying by Q4 you see the EBITDA margin turning around. Is that did I hear that right?
Yep, you heard that right. Yes. So movement will happen every quarter, but Q4 it will really you will see the numbers that we saw some quarters away. Maybe 3-4 quarters before this, or 5 quarters before this. You'll start seeing those numbers back, and then obviously it'll get better. Because as more and more of Challengers Arena and Onmo revenue comes in, the profitability numbers on an overall basis will set to improve.
Okay. And any just on the B2C side, now that we have you on board, is there a change of strategy from how we were approaching the market for scaling up B2C? Any initial thoughts?
Okay.
No, honestly, there's no change of strategy. The goal is to have the best gaming service. And when I say the best, I mean from an end user perspective, the most engaging, where they spend the time, they like it, they involved. There's a lot of features coming in on that's changing. We talk about, cost of the service engagement, but, all the live features and social features that not just us want, but the operators are asking for, right, to go to our 200 operator roadmap. Most operators that have signed contracts right now and all the ones coming, they all want to see the social features, meaning, and then just for you to understand the social features, that today when you play a game, you only see your gameplay. In the coming months, as soon as anybody plays a game, they'll be live streamed live, and you'll be able to jump on anybody's game and see their live game on your phone, and eventually co-play live with them. So a lot of interaction coming along, which will change the whole engagement, the whole metrics, right? So that's exactly why Near is jumping on board to get the best in the industry to make sure we have the best gaming service. And keep in mind, the D2C service is the exact same one that we sell to operator. In the past, when we used to have operator-based services, they were different. They were white label, and the actual service was not the same for each operator. In our case, the D2C service is the exact same service that we offer each operator, and it's with our brand. And actually, the subscribers that we acquire on operators will be able to play with other subscribers from other operators or from the D2C, right? So that's why it's so important to really have the best service as a core on Onmo, and that's the strategy here.
Understood. Thank you. That was very helpful, FC. And on the cash side, is there a minimum cash that you want to have, because we are seeing each quarter it is coming down? So what is the minimum cash you want to make sure you have on the balance sheet?
Yeah, so we already have a decent 120 crores on the balance sheet. Always keep a healthy balance of around $10 million on the balance sheet. We'll soon start having good amount of EBITDA, as Sanjay explained. And our B2B business is not going to require a significant amount of cash. That's just working capital. And then we'll generate enough money in the coming quarters to largely fulfill our cash needs.
Got it. Okay. Thank you and all the best.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Pulavarthi Saikiran from Pulavarthi Advisors. Please go ahead.
Yes, hi. Thanks for taking my call. Just quickly, if you can just help us understand why net active subscriber growth has been very weak this quarter, in spite the cross additions were very strong. That too, when you have got more customers getting signed up. If you can just help us expanding that will be really helpful.
So if I understand your question, you're saying why have the net adds have increased?
Okay. I'm just referring to the slide 7 of the presentation. If I look at on the left-hand side, you have got gross adds during the quarter is almost like 2.32 million subscribers, which is really healthy, even if I look at on a quarter-on-quarter basis versus 1.85 million in Q4. But if I look at the net active subscribers, the growth has been very weak. Just moved from 1.33 million to 1.66 million. Is there any challenge at the retention side, or what is this gross additions not adding up to the net subscriber active growth?
Yeah. Okay. So I'll explain that. So today the only mode of payment for the users is their telco wallet, right? So they either the prepaid wallet or their postpaid bill, right? That's where we charge the user to use the service, correct? So since most of our business right now on Challenges Arena is in the emerging markets of Asia and Middle East and Africa, the most of our customers are on prepaid. So when we go, so what you see on the left-hand side of the gross adds is what subscribers have added for the quarter, and the next graph tells you what customers have retained for that quarter, right? And the difference that you see, 95% of that users have dropped out because of not able to pay for the service because they don't have enough balance on their wallet, right? And only 5% voluntarily deactivates the service. So it is primarily a payment issue rather than users voluntarily deactivating the service, and we are looking at options to how to solve that problem, right? So for example, one of the options could be that we could integrate standard digital wallets for in different countries, where if the user doesn't have any balance on the telco wallet, they could pay from the digital wallet, right? That's an option that we're evaluating. So that's an important area for us to improve, and we are working on that.
So generally, just to add to this, what Nandi said, this is something that we have to work together with the telecom operators. A lot of times, the telecom operators insist that the usage has to be from their wallet. But now we've seen some traction in a couple of customers who are talking to us, saying, you can actually start using the consumer can actually go ahead and use any wallet, any digital wallet. For example, in India's case, if we were to give an example, so suppose somebody has a phone pay or somebody has a Paytm, then they could use that also to make payment for our service. That's something that is what we are exploring. Hopefully, we should see some activity there where these things open up, and then of course this element of people going off because they don't have money in the telecom wallet will not be there.
Great, that's helpful. And just one more question: you guys have actually guided for a very strong revenue growth in the coming quarters. So if you can just help us understand the cycle of revenues coming into Onmobile from the customer sign up to become active and the revenue growth. How does this flow? If you can just help us understand, that will be really helpful as well.
So, from a customer's perspective, there would be people who will subscribe to the service. There will be an element which will come as a revenue to the telecom operators, and there will be a revenue share model where we will get our share. That's essentially it. From a time the customers subscribe to it, our revenue flow is immediate.
No, I understand that. So I'm just asking, say, for example, you have given a very good data in terms of the next quarter. Probably you are saying 38 active customers will be there because you already have 26 customers as of June 30th, and 12 customers have been signed. They might go live. So I'm just trying to understand, sir, once they go live, how the revenues will start to move in the sense like in the first 2-3 months, how much revenues might kick in, or if any drivers for that revenue, if you can help us understand that will help us to model the numbers.
Yeah, I mean, it will be difficult for us to tell you, because 12 customers going live will be, somebody will go live in July, somebody in August, somebody in September. By the end of September, we expect 12. So revenue could be for 2.5 months, could be for 1.5 months, could be for 15 days. We don't know yet. So I will be wrong on my part to give you a sense that you should model it on that basis. I would rather say that the modeling, if at all, you can take an average number of sales that they will be there for half a quarter, and then one half of that will be revenue. But what I think is important is it sets up so beautifully for the next quarter. So, for example, today when we have 20 customers at the end of June, all 20 of them will give us revenue for Q2. And therefore, when we say that by Q2 end, we'll have 32 customers, what I think the way you should model it is saying all 32 will contribute for Q3. I think that's the better way of doing it rather than trying to nitpick in terms of, somebody will contribute for half the quarter, somebody will contribute for only 15 days. So I would rather like you to do it that way.
Got it, sir. And based on the net active subscribers, that will be a fair thing to look at in the sense like the numbers flowing in?
Sorry, we didn't understand the question.
No, I mean to say that, sir, the revenues are highly dependent on the net active subscribers. Is it a fair assumption to make?
That's correct. The net ads. See, no, the gross ads also, like Nandi mentioned, the moment somebody comes in, he will subscribe to a month and then maybe gets churned out once the month is over. So this will be a rolling thing where the subscriber comes in, puts in the money for a month or two, and then at any point in time, if his revenue or if his money in his wallet is not there, then he would churn out. So this is an ongoing cycle. The moment people come in, they pay for it.
Perfect, sir. Great. Thanks a lot, sir. Thank you very much. This was really helpful.
Thank you. Participants, if you have a question, you may enter star and one. We have the next question from the line of Abhishek Banerjee from ICICI Securities. Please go ahead.
Hello.
Yeah, Abhishek.
Yeah. So just one question from my side. Would you give us some clarity on, how the currency movements in the last quarter have impacted your revenue and bottom line?
Yeah, so largely the Europe business was affected on account of the euro depreciation versus the rupee. So I think that's that marginal impact. But as the European crisis improves, that should basically get nullified in the coming quarters. So we had roughly a small, around a 2 crore dip on account of forex in the video part of the business.
Understood. And also in the challenges arena, the contracts that you have with your operators, those are denominated in what currency? It's in local currency?
Most of the people would be on local currencies. So various countries people will have local currencies because that's what the rest. See, please understand that we are on a revenue share model most of the time. So once they earn in the local currency, they will pay us from a share perspective. And so mostly we are on the local currency model.
Understood. And there would not be any higher translation there because most of the currencies have fallen more, right, compared to rupee?
Yes, yeah. So hopefully, we've already seen the brunt of it. Let's hope things get better from here.
Got it. Thanks, sir. That's all from my side.
Yeah.
Thank you. We have the next question from the line of Sunny Gosa from MK Ventures. Please go ahead.
Thanks for taking my question. Basically, what I would like to understand is what is the break-even level of revenue on challenges arena, like in terms of at what scale do you break even, and basically at what is the revenue range at which you start making the intended EBITDA margins?
So let me say that when we launch with a particular telecom operator, I think within a couple of quarters we start making it positive EBITDA. Let me put it that way, and that's the whole point. Now that we have got a substantial base, the new additional numbers of new customers coming in. Just continue to add, and overall profitability will continue to grow. So I wouldn't call it in terms of per subscriber or something like that, but I would say the first couple of quarters, within the second quarter, we start towards the end of second quarter, we start making money.
Right. And in terms of the cost structure, what would you ascribe the major cost heads? Because a lot of the content development has already happened and it is already there. So incrementally on deployment of a new customer, what are the major costs that are involved?
The main cost is marketing, and that also is largely upfront when we acquire the customer and starts normalizing, as Sanjay mentioned, immediately from the second quarter itself. So it's largely marketing. Content cost, as we add more operators, and some of these costs will start getting amortized over a large customer base. So that's not the bigger cost. It's only marketing.
Sure. Thanks for the reply.
Thank you.
Thank you. We have the next question from the line of Mithun Aswath from Kiva Advisors. Please go ahead.
Just wanted to understand in terms of your legacy business, what sort of growth are we looking at this year? And what are the reasons for the margin deterioration despite, revenue growth quarter on quarter? And I think last quarter you had guided for improved revenues and margins for FY23. So I just wanted to understand if you can touch upon that. That's my first question.
From an overall perspective, like we said, we continue to maintain that our revenue growth will happen. And like I said, towards the end of the year, we'll see profitability improving. And we maintain our position as of now. The revenue will continue, the robust growth in revenue will continue. We've seen Q1, we've given you lead indicators of Q2. So that will help you look at Q2, Q3, Q4 in terms of what is the kind of trajectory we are expecting in terms of revenue growth. Profitability, like I mentioned, as more and more customers come in, we will see robust increase because if you noticed, you might have seen the gross margin already started to look up. If you see, we were at about 48.89% or something like that, and we are now at 51 point something percent, so 51.5%. So clearly, that improvement is happening. It will further increase over the coming quarters, and therefore in Q4 it will be a different picture altogether.
Right. That's good to know. The other question I had was on the Onmobile business. There was talk of you housing it separately and maybe B2C play that you are embarking upon on that. So just wanted to understand what are your thoughts on that? Or would you focus on the operator level Onmobile opportunity that you seem to be looking at right now? So just wanted your take on that because that would have implications on the P&L as well. So if you could just highlight that. The entire business actually per se, the IP for that business and otherwise is going to be housed in a separate subsidiary. You're right. That is out of New York. Onmobile Inc. Is the company that we have there in the US. So that is correct. But the business, our business is such that it runs all across the globe. So the revenue will accrue. A lot of times the revenue accrues in the local subsidiaries. And so we look at business as a business vertical. Entities don't necessarily, differentiate or mean any difference for us. Our focus is to look at businesses in their vertical analysis and not necessarily entities. Entities have become relevant now, and that is only that one entity, which is Onmobile Inc., which is in the US, which will really house the B2B or the Onmobile business as a whole. And whatever happens between, let's say, the subsidiary, ex-subsidiary, let's say subsidiary in Africa versus the US, there will be a mechanism of transfer pricing, which will be very transparent and robust, which will enable the profitability to be housed in where it appropriately belongs. But at the global level, at the composite company level, it will not make a difference at all. No, my question was more on the funding that you required for this B2C play that you are looking at the Onmobile level. Where are you in the journey towards that? With a cash pile is, obviously quarter on quarter is coming down. So how would you fund that? Are we close to maybe unlocking value there and trying to get some investor? Because it's been 2 or 3 quarters since we've spoken about that. So just wanted to know whether we are still embarking. We would, maybe pivot towards more a B2B play even within the Onmobile opportunity.
So, sorry, go ahead. Yes, go ahead.
Yeah, I just want to say that we have so much traction on the B2B side, and and it's the same product, right? So marketing-wise, there's a big gain of launching with operators first, getting subscribers, and it's our same brand, right? As long as the product is really good. So Investor-wise, they look at this, and we were trying to fund only the D2C side, right? But to be honest with you, the investors look at this and they say, wow, you're making so much money on B2B, we want to be part of the B2B side, right? So now it becomes a matter of metrics, right? Where do we, how do we account? And that's why Sanjay was talking about Onmobile and how do we do the cross between the B2B, which is provided by Onmobile, versus a pure D2C play, right? Because right now we're really we're having a very particular model in the sense that it's really a B2B and D2C play combined. So to be honest with you, we're discussing with investors right now where do we split the value and how should we do a deal and what's the quantum, right? How much money should we raise and for what? So that's the discussion right now. Sanjay, you want to add anything? Or?
No, I think you beautifully put it across. Clearly, to put it more succinctly, we are actually very flexible in our thought process because a lot of it, like FC said, the investor community is also keen to take a part of this substantial gain that they see coming up in the B2B side of our business. And they say that, okay, we are ready to, somebody would be ready to invest in B2C, but they want to have the gain of B2B. So we are looking at that, and there will be flexibility from our side depending on how the investor is comfortable.
So will we see any sort of monetization in the next couple of quarters? Is there any timeline that you have in mind?
So we are working towards it. Want to pin a date to it, but yes, we are working on that.
Okay, thank you.
Thank you. We have the next question from the line of Naman Bhansali from Perpetuity Ventures LLP. Please go ahead.
Hi, sir. I have two quick questions. The first is on marketing costs. So how much of the marketing cost is one-off as I see few customers are going live? And my second question is on Onmobile B2B business. So when can we expect to see revenues kick in? Because I think as you have guided, you would provide some disclosure on the Onmobile. And is this a case wherein we are not seeing the revenues to be scaled up, or are we waiting for proper disclosures for Onmobile? Thank you.
Yeah, so the Onmobile revenues have already started, although we'll see more significant jump in those B2B Onmobile revenues in the coming quarter, as Sanjay had explained. The marketing cost, the entire increase that you see from a YOY perspective is largely on account of Challenges Arena and Onmobile. So it's basically the investment behind these new products, which is also adding to the top line.
Okay, thank you.
And in terms of disclosure, we will, starting next quarter, you will see the Onmobile revenues exactly the same split that you see for Challenge Arena. So you'll be able to compare the Onmobile growth path on the B2B side compared to Challenge Arena.
Okay, that's great.
Thank you. Ladies and gentlemen, that was the last question, and we will now close the question queue. I would now like to hand the conference over to the management for closing comments. Please go ahead.
Well, thank you very much for joining on this call. Again, I just want to reiterate that I'm quite excited about our plan, and we're gearing up the whole company to get to our 200 operator plan by 2025, and that's what you will see in the coming quarters. So thank you all for joining the call, and I look forward to see you. Next call is going to be in November, the second week of November. So thank you all, and see you in November.
Thank you, members of the management. Ladies and gentlemen, on behalf of Onmobile Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.